And joining me right now is the Wall Street Journal's global economics editor, John Hilsenrath. John, good to see you. Thanks so much for being here.
Great to be here, Maria.
Well, we do have a very strong economic backdrop, don't we?
Yeah.
We are on the heels, or on the doorstep, rather, of first quarter earnings, which I want to talk to you about. But let's talk about the big news this week for markets, and that was the inversion of the yield curve. Short-term rates higher than longer-term rates. What's your take on that? Is that indicating a recession is at hand?
Well, it has been an indicator of recession in the past. It doesn't have a spotless track record, but it's got a pretty good one. And, you know, what it seems to be suggesting is that investors see the outlook for inflation deteriorating. They see slower inflation than had been expected. And it suggests that the Fed might have gone too far raising interest rates over the last couple of years. So you see short-term rates going up more than long-term interest rates. And we have to watch out for that. You know, the president speaking last night pointed to an economy that was really strong in 2018. We had, you know, really fast growth rates and a job market that got hotter and hotter. But the question is, what happens in 2019? It looks like we've hit a real slowdown. And let's not forget the Commerce Department revised down its growth estimates for the fourth quarter. So we were slowing going into 2019. And we just have to see if that continues.
Yeah, you make a lot of good points. I just want to point our viewers to the fact that we're going to get some important economic data this weekend, John. On Sunday, we will get the Purchasing Managers Index out of China.
Right. Yeah.
And that's something everybody's watching because we know that the Chinese economy has slowed this year as a result of this back and forth with the U.S. And that ultimately you have to expect hits the U.S. You also have Huawei this morning posting 2018 earnings, saying that revenue increased by 20%, profits were up 25%. Amazing that this company shakes off the U.S.'s efforts to block allies from using Huawei products. They're even announced they're coming out with glasses, so they're going strong, John. What's your take on all of the above, in particular that PMI that we're going to get on Sunday morning? How important is that to you?
So let me take it in two pieces, the PMI and then Huawei. The PMI, you're absolutely right, Maria. That's really smart to be raising that because, you know, we've seen a global slowdown in manufacturing. In addition to China PMI numbers coming out Sunday, we have PMI numbers and ISM numbers, all gauges of manufacturing activity coming out from all over the world. And we're going to be watching that really closely because those indices have slowed significantly in the last couple months, or the early months of this year, and we have to see if that continues. You know, a pickup from March. I was actually talking to our Beijing bureau chief about this just yesterday, and he was saying they've seen some pickup in some other indicators, so they might see a pickup, and that would be a sign that, you know, maybe the global economy is leveling off after taking a real hit last year. On Huawei, you know, the UK just put out a report yesterday or the day before about Huawei's risk management practices. And, you know, the U.S. has been trying to isolate it. It's been very successful selling its equipment elsewhere in the world. This UK report is interesting because it suggests that, you know, maybe the message is getting through to some of our European partners that they've got security issues to look out for when they deal with Huawei.
Yeah, I know. This story is going to continue, and of course, we'll be on it. How about this Journal op-ed this morning, John? The editorial board at the Wall Street Journal commenting on Steve Moore's nomination to the Federal Reserve Board with an op-ed this morning saying, Steve Moore for the Fed. Writing, quote, if Mr. Moore is formally nominated, we hope Republican senators do not fall for the calumny being thrown his way. He was a generous colleague, and as a Fed governor, he might be a useful counter to the groupthink at the Eccles building that has so often been wrong. And we know, John, that he says the Fed should cut rates immediately.
Yeah. So we have that's on the opinion pages. I'm kind of here representing the news pages. We actually have an interesting story out on Steve Moore today as well on the news side at the Journal, looking at his unusual path to the Fed. You know, the Fed is stocked with PhD economists or, you know, people who've spent time working in government or in banks. Steve Moore is a different creature. You know, he's kind of come up through conservative political circles. He wrote for the Journal's opinion pages, worked at the Heritage Foundation, founded the Club for Growth. I think, you know, what we could certainly say is he would be a different voice inside that building. He would not be, a part of, the kind of culture that you see inside the Fed of PhD type economists. I think he would certainly bring a different point of view to the institution, and I think it would be fair to say he would liven up some of those conversations at interest rate meetings.
Yeah, and I think that's what the opinion side was making that point as well. John, it's always a pleasure. Good to see you, sir.
Okay, thank you.
Have a good weekend, John. John Hilsenrath from the Journal.